Hello and welcome back to the ROI channel, the channel that's obsessed with the art and science of return on investment. And today, super excited to be able to share with you a new publication, hot off the press. And I'm going to be explaining what that is. We alluded a little bit to it in our interview. See the ROI podcast episode with Jordan and myself, the options traders. Without further ado, let's get into it. We've got a new publication, new substack known as the Options Mavericks. And we're going to be showing you exactly what we do week in, week out, trading the options market for income that allows us to live a pretty good lifestyle, I have to say. So having a little bit of fun, as you can see in the meme generated there. We really do have a lot of fun, and I hope you guys are going to come along for the ride. I think you're going to share in the fun as well. So disclaimer, as per usual, guys, standard disclaimer, not financial advice in any of these videos. So anything you see on the channel is just my opinion or what I am doing, or Jordan's opinion, in this case, what he's doing. Any of the guests' opinion, what they're doing, okay, it's just opinions and what we're doing for entertainment / informational purposes. We make no guarantees as to the performance, and obviously what I do may not be right, and it may not be right for you. Okay, so I am just sharing and documenting the journey as well as the other guests on the channel. Please do seek professional, personalized advice if you wish to make decisions based on anything you hear today. But we don't advise it. Okay, this is just what we're doing. What do we do exactly? Very good question. So Jordan's off around the world. It seems to be every other week. I am booking a huge trip coming up at the start of next year. So I'm super excited. I'll be traveling for at least the first quarter of 2023, likely for even more after that. And what we do is we live life on our terms as much as we can. And our secret sauce that enables us to do that is trading options for income. Okay, so this is a little bit different, related to, but a little bit different to the investment content that I put out. Obviously, investing is, for me personally, I do for the future, and it does create income. However, I'm looking to build up my net worth and capital account for my financial security and the security of my family. What we're talking about today are ways that you can generate cash as an extra business for yourself. And the way that we particularly like to do that is through trading the options in markets. So who are we? Very briefly, guys, we're going to be doing lots of different videos. So Jordan, who you will have seen in the ROI podcast, he's a geologist, he's a traveler, and an options trader. And as you can see, he likes to get out and about. He's always hiking up a mountain or a volcano or kicking rocks of some sort when he's not in his other natural habitat, which is the bar. And myself, I'm a lot more boring. Okay, I'm started life as a physiotherapist, so enjoy sort of biomedical background, an investor and options trader as well. So I'm not always doing it as much fun stuff as he is, but I enjoy creating content, and I've done my fair share of traveling, and I'm continuing to do so. So I really love the ability to communicate with you guys and create another form of income by trading options. Super excited to show you, to share with you what we do. So what are options? This is not going to be in-depth at all, guys. I'm just going to give you the basics today, and this stuff will be covered in our publication, okay? Options. When it comes to options of financial instruments, it's helpful to think of them as insurance contracts. That's what I think of. I think of my investments over to one side. I think of my derivatives trading book, or my options book, as my personal insurance company that I run. So I run this as a business, and what I do is I trade options, which are insurance contracts, and I generate premium, and I generate profits on the assets. Okay, we buy or sell insurance contracts over different assets. In this case, usually assets traded on stock exchanges around the world. Okay, we're going to give a much more in-depth overview and step-by-step breakdown inside the Substack group. Okay. So here, good old Investopedia, stock option is a financial instrument that gives its owner the right, but not the obligation, to purchase a given asset at an agreed upon price and date. So there's various ways that you can do this. You can be the buyer or the seller of the insurance contract. We personally do both. We tend to focus on the selling of the insurance if we're looking to generate premium income. But again, these are the things that will be explained to you inside the Substack group. So how do we trade them? Obviously, you need a brokerage, pretty straightforward. Not any brokerage will do though. So you will need a brokerage that offers options, and you yourself will need to qualify as an investor to be able to do that. Depending on the brokerage you use, the qualifications will vary. So you'll need to check that with your individual broker. I personally use Interactive Brokers because they are the biggest, best, and widest broker that give me access to all sorts of really good stuff. And so that's who I use personally. Jordan also uses that as well. You, as far as I'm aware, and this will depend on your situation around the world, you don't need a lot of capital necessarily to open up a brokerage account with Interactive Brokers. However, there will be certain requirements and certain declarations that you'll have to make should you wish to trade some instruments such as options. Again, you'll need to check with them depending on the country in which you're filing your account. How do we trade them? We trade various strategies, and we're going to share all of them with you that we do to fund our lifestyle through weekly or monthly income. Fairly straightforward. The latest publication will show you exactly how by showing you exactly what we are doing. So we will have a lot of educational content on there, but it's not about putting out just a generic video. It's definitely not what this is. What this is documenting our journey, our exact trades with dates, numbers, profits, losses, the whole works, showing you exactly what we're doing. Okay, that's what it's going to be. Nothing worse than signing up for something thinking you're going to get a result, and then it's kind of a lot of theory and it's a lot of educational content, and at the end of the day, it doesn't really help you that much. This is going to be super practical. This is going to be super precise and hopefully super simple. Sharing with the results we've had thus far, which have been super profitable. Can't make any guarantees for the future, obviously, but so far things have been going very well. So why this particular method of trading? Why would we do that? Well, everyone's got their own reasons. And if you listen to the podcast, you'll hear Jordan's. And a lot of them are similar to my own. Personally, I like the leverage on offer with options. Gives you a very good asymmetry. So you can, if you use them intelligently, you can limit and define your downside with potentially unlimited upside. And you can get a lot of leverage in terms of the yields should you wish to engage in the sell side contracts. So depending on where you are, if people are looking for income, very difficult to come by at the moment, given the state of cost of capital around the world. And so people are looking for return on their cash, because normally in the bank accounts, back in the days when you could get 10%, and that was a real yield above inflation of maybe 7%, you'd have a 3% yield. Those days seem to be long gone. Even though we've had a rise in interest rates, it has not kept up in terms of inflation. So people are looking to protect their savings power, and they're looking to increase that and generate some income off their saved cash. And that's what, in my opinion, things should be about. We should be encouraging people to save. And one of the best ways to do that is to be able to generate cash off your cash. However, for aforementioned reasons, that's not particularly applicable in today's banking system. So this is a way, and Jordan explains this very well in the podcast. I highly recommend you listen to his take on this, is a way that you can gain a regular income from your account. So you can have a certain amount of cash sitting there used in what we call margin, and you can generate very high rates of return on that cash, much higher than anywhere else that I can find currently. You also have currency arbitrage. So this is optional, but what we like to do is trade mostly US derivatives. So we will use the New York Stock Exchange, the NASDAQ, the S&P, those types of markets, because we can sell contracts in US dollars. And depending on where you are in the world, so Jordan at the moment is in Argentina. So every dollar that he earns is worth somewhere around 300 pesos in the local currency units. So the idea being that you can create a large amount of cash generated on your margin account, and you can, or the cash that you've saved and put into your brokerage account. And then depending on where you are in the world, if you're outside of the US, basically at the moment, you're for every dollar you're gaining, you're gaining more than $1 off the premium because of the difference in currency. So me, I'm currently in Australia, and I think the Aussie dollar closed at 65 US cents. So for every dollar that I earn from my US options trade, it's more like $1.35, let's call it, whilst that currency rate is in place. So that is a significant difference if you think about that over the year. If you were to make 100,000, obviously in options income, you're adding an extra, let's call it 35,000 at that exchange rate for the year, which is a big difference. These markets are highly liquid. Okay, so we choose and we show exactly where we like to play. We choose markets that are highly liquid and will get you in and out of the positions that you want. A huge point here is that it's geographically independent as a source of income. And Jordan talks about this as well, from his trip all the way around the world, from Bali to Mexico to Colombia and Argentina, where he's at the moment. All you really need is an internet connection and you're good to go. So what I really like about this is that it's a digital form of income, completely geographically independent, and allows you to generate income from anywhere with an internet connection. So if you're in a similar situation to Jordan, for instance, and he really wants to travel and he wants to make a little bit of money while he's away so he doesn't dip into his savings account, he has found that this is the perfect vehicle for him. Me, I just like creating businesses, and those reasons appeal to me as well. And I just like trading options. What can I say? It's a great form of income. So what's the offer? What are we doing? This is our new publication. It's a premium service, okay, because we're going to be showing you how to potentially make very good returns. I'm going to show you how we run things exactly. So it's a premium service that will be run on Substack. If you're a member of the ROI Club, you'll know how I roll with that. That's my entry level, very basic publication. We share and record the exact trades we make, and we keep score as we do it. So again, we're not just going to be lecturing to you. We're going to be giving you exact breakdowns in video format, showing how we place a trade, and more importantly, what trades we're placing. We don't advise them necessarily. It's just what we're doing. So if you're interested in the results that we have, or if you're interested in what we're doing, you can see that take place in real time. We put our money where our mouth is. To me, this is very important. That if you're listening to someone on the internet, not so much as if you want to follow them, but if you want to work out who is credible and who is not, very simple. Who eats their own cooking? Very, very simple. Who puts their money where their mouth is? And as I said, because we're showing you exactly what we're doing and how we're doing it, we are putting our money where our mouth is. Doesn't mean we're going to be right. So disclaimer, but we at least have that integrity and transparency of showing you exactly step by step what it is that we're doing. So we've covered this point to death. We don't tell you what to do. We show you what we're doing, how to do it, and when we're doing it. Our aim is to have a hell of a lot of fun, helping and inspiring people to enhance their freedom potentially by trading options, and to document our journey. And so far, it's been a hell of a lot of fun, and I know that that's going to continue. And the commitment will be at least one weekly trade video that we are making. It will likely be two. Jordan will usually do one, I will usually do another, and then I will explain various strategies as we go. Okay, like a lot of analysis and education. You will have access to the ROI Club, which gives you full breakdowns on companies, macroeconomics, and a lot of the companies that I cover in there that I'm using for my long-term investments. Those companies oftentimes form the bedrock for the underlying assets against which we trade options. So if we're looking at a particular company and we like its prospects long-term, we'll have that in the ROI Club, and you'll get access to that for free as part of the service. And you'll also show how we trade options to generate income at a faster pace on a shorter time span. Okay, because that's what I do. So again, I'm showing you exactly what it is that I like to do. A few questions that we've had so far. A lot of people think about financial derivatives. They've heard it in the news that it's very risky and it's highly leveraged and all this sort of thing. I would say that it completely depends on how you use them. We do not sell naked options or uncovered options, and you'll learn about what that is. Basically, we do not sell contracts that we can't cover with cash or with collateral. And by doing that, we remove so much of the tail risk to the left side. It's not funny. And so we really feel much more comfortable just doing things on a cash account. So we also do not use margin. And if you're not using margin, and if you're not using if you're not engaged in uncovered derivatives, which we do not do, you've removed a lot of that negative risk. Is it difficult to do? Not particularly. And we're going to show you exactly how to do it. This week's video trade that Jordan did, the video took about 4 minutes and 30 seconds. So it's not particularly difficult. And we'll show you the software that we like to use, the platforms, and obviously that 4 minutes and 30 seconds is including his explanations, which would take a little bit longer. How much money do I need? This is an interesting question, obviously very subjective. In our podcast, Jordan talks about having probably at least $5,000 to start to trade against. I think that's very subjective. You certainly could do that. I don't think you'd gain a lot out of it with anything less than 5,000. And so I would humbly suggest that that would be a minimum that you'd need in order to get the most out of it. But again, that's highly subjective. What sort of returns can I expect? Obviously, depends on the volatility priced into the market, all those sorts of standard disclaimers. However, we have consistently found so far that if you want to be really aggressive, you can look at 5 to 6% return per week. If you want to get very aggressive in terms of how close you are to the underlying assets, and we'll explain all that, of course, in the group. Or if you want to be more conservative, and you can still look to earn anywhere from 1 to 2% per week if you were engaged in a weekly strategy. If you have less time, a 2% per month strategy, which compounded over 12 months, would obviously be 24% yearly return, which is very, very good. Is highly achievable without a hell of a lot of input or activity and stress. So we personally, Jordan aims for about 5%. I aim for about 3% per week in terms of this trading income, but you can obviously alter that to suit your particular profile. How much is the program? I'm going to show you that in a second with different payment options. And do you get a free trial? At the moment, yeah, we'll let you try it for a week for free. And if you like it, great. And if you don't like it, no harm done. And you can keep a free subscription. You'll get some content for free, but for this one, not too much, guys, because it's a premium service. For the ROI channel, obviously there's heaps of stuff that comes out for free. Okay, so let's look at a previous trading example. And in this particular case, we are looking at a New York Stock Exchange stock. I'm not going to tell you which one it is. That'll be for the group. But in this particular case, this is one that I put on, and it was as of last week. So we are trading, or I traded a stock at currently the 11th of November, the stock shot up to $4.42. I sold an insurance contract on that stock, okay, that expired a week later. So it was a weekly insurance contract at the $4 strike, okay. I sold 100 contracts. What that looks like, to give you an example, is the premium that I collected that's priced at the market. In this case, I was able to sell that contract for 12 cents per contract. One thing that you'll learn in the group is that for stock options, the standard contract size is 100 shares of stock. And so in this case, I received $12 in premium for every 100 shares, for every one contract, which represents 100 shares of the underlying stock. Okay. So if I sold 100 contracts, obviously my total premium that I received, $1,230 net. So after commission, brokerage, and so on and so forth. So margin requirement. So in order to do that, I needed to have set aside $40,000 for this particular trade. And the way you work that out is that whatever the strike price at which you insure the contract, times by the number of contracts, times by 100, because remember, every contract represents 100 shares of stock. That's how you work that out. So 100 by 4, and that should say by 100 again, because per contract is a little typo there. But I've explained that in the above line for $40,000 worth of cash that I needed to have on hand in case I needed to make the trader on the other side whole. So we're going to explain all that. Return on the margin. So I had to have a margin of $40,000 set aside. I received $1,230 worth of premium or income. And so what does that work out to be as a percentage? So in this case, that's a 3% return weekly, or annualized, according to my annualizing calculator. It might depend on which calculator you use, but my annualizing calculator says it's 367% per annum. Now, obviously, that's assuming you could, in theory, do that week in, week out, which will depend completely on market fluctuations. But this is where we will show you on our weekly videos which stocks we're trading in order to get our hurdle rates of return. Here's another trade example, real life. This was last week. This was one put on by Jordan. Again, it's a New York exchange traded stock. Jordan engaged in a different strategy, which we will certainly show you, where he actually bought the underlying stock and then went further out and sold insurance against the stock that he owned. Okay, don't worry, we'll break it all down inside the group. So the stock price on entry, he bought it $27.84 with the premium sold, I believe. He then sold the insurance at the $28.50 strike. So should the stock rise in price, he would then have to sell the stock at that price, regardless of how high it went. And if it didn't go that high, then he would keep the premium for free. And then the next week later, I assume he would look to write again and get more income. So this was for a 7-day expiry, and there are various different strategies that you can use. In this case, he received $330 on a cash outlay of $8,022. So he bought $8,022 worth of the asset. He sold, he went into the market, put in an offer for the premium, and he received $330 for that. So his return on investment, because he's already invested the cash, would look like this. It would look like $330 over 8,022 outlay, or 4%, which expires weekly. Okay, so in theory, if he could do that every week and get 4% return on investment, that's a 672% annualized return. So a very good rate of return. And this is why we like to use the options. This is what I believe is an intelligent use of leverage, because he's not at risk of getting a really nasty margin call. He has the collateral there to cover. And obviously those returns are very attractive. Now, there's an extra kicker in this, in the strategy that Jordan chose to use for this week, this particular week, which was last week. Return on investment if the stock takes off. Okay, so what if he has to sell the stock because it takes off in price? So that would look like this. He would receive the premium plus any gains in terms of the entry price and the exit price, in this case, the strike price of the insurance contract, because he has to sell it at that price. And that would look like $528 in total when you add up the premium plus the gains in profit. Over the same outlay, 6.5% weekly return, or according to the annualizer, 2,567% per annum. Now, obviously, that's a pretty silly number, but these are just and I'm not suggesting that you can do this all the time or that it always works out that way or anything like that, guys. I'm not trying to hype anything. I'm just breaking down the numbers and giving you a real life example of what happened and the type of things that we're going to be sharing in the group. So, okay, offer to you. What does it look like? So normally we're looking to sell this thing on a monthly membership of $157 a month, which obviously both of these trades would have you covered if you were in the position to do those. And remember, Jordan's cash outlay required $8,000. So not a particularly large capital amount required. Or if you want to pay up with a yearly purchase, we'll give you a big discount and it'll work out to be $99 a month. Okay, so certainly not particularly expensive given the type of material and the precision of the material that we're selling. Get a weekly trade video every week. And obviously you'll get further educational videos breaking down these strategies as we go along. My bonus to you guys today is to get free access to the ROI Club, which is my original publication where I publish at least every month in an article on macro update, what I'm positioning, what I'm buying, what I'm avoiding. And I do an in-depth analysis on a particular company, and that's purely exclusively for private members. So I charge $60 a year for that sort of thing. And obviously you get that included. There's a great connection between the ROI Club and the Options Mavericks, because a lot of the companies that we cover in the ROI Club, if they have an options market that I deem as appropriate, I tend to use those assets that I already know, or I think I already know well, against which to trade the options. So that's what it looks like. If you want to get started, guys, the link will be in the description. Look forward to seeing you on the other side. And remember that there's a 7-day free trial. So you sign up and you like it, great. And if you don't, you sign up and you think it's not for you, you can cancel it out without any charge. Okay, so I think that's pretty generous. And Jordan and I will continue to be putting out both free content and obviously a hell of a lot of exclusive content that will be behind the paywall. So there you go, guys. That's what we're doing. That's why we're doing it, having a lot of fun. Hope to see you on the other side. Any questions, drop them in the comment section, or you can leave me an email. And I look forward to catching up with you in another video shortly.